All right, we're back. The New American Realist. It is April 24th. I have a returning guest today. Peter Granage is back with us today, and I got a couple of good questions for him. We're trying to get this video in for the last few days, and I'm glad he was able to get it in today. So how are you today, Peter?
Very good. Now, I'm a senior now, so I got to go to bed soon. So,
Okay, well, we're going to keep it short.
I'm only kidding you.
Well, I was going to
take as long as you like. Take as long as you like.
All right. No, it'll be just a couple of questions. And I got a first question for you. I think it's not an easy question to answer. It generated a lot of kind of commotion, if you will, on Twitter. It was from Macro Alf. He's been on several big financial channels as well, like yourself. And this is what he tweeted. And it had about 334,000 views on this and many answers, a lot of interesting comments. So I just wanted to hear what you think on this. On the story that countries are moving away from the US dollar, look, it's simple. There are tens of trillions of US dollar liabilities issued by foreign players everywhere in the world. And he finishes off with this. How are you going to service US dollar debt without USD cash flows, question mark?
Well, I'm not certain what he means by US cash flow. I guess what he's trying to say is that foreign countries issue debt in dollar denominations. I'm just, by what you're saying, is what he's saying. And how are they going to be able to service it if the dollar isn't reserve currency? First of all, no one is saying that overnight it's going to disappear at the reserve currency. What I think is the more likely scenario is what's been happening for years. Less and less usage of the dollar as the reserve currency, and the likelihood of introduction of at least area countries trading away from the dollar or worldwide trading away from the dollar. Doesn't mean the dollar is just going to go to zero, but they may decide to use other currencies. People got to remember, there's been several countries who have led the world at that time as basically as the reserve currency. There was a time when everybody thought Great Britain would be forever, and it wasn't. And ironically, one of the things that led to its demise was taking on too much debt, which I think is leading to the demise of the United States. So listen, this is all still up in the air, but the one thing you got to realize is just a couple of years ago, nobody in the mainstream media spoke about the demise of the dollar or BRIC nations and all. Just some handful of us that were on the edge, and now it's become mainstream news. And I can tell you this much, this I know for certain, the general financial service in the United States, the typical advisor, has no concept or understanding what it means or what impact it could have. They've been focused on a one-way street for years. They know nothing about geopolitics and how it plays a role in our own economy. And we're seeing now some people realizing that it's not something to just laugh at and push aside. It has to be taken very serious.
Got it. Based on all that, what is overall, you kind of touched up on it a little bit more, but I like to hear with the Brics, just a little bit more, if you can expand what's been going on with other countries, with China, of course, and Russia, doing more and more trades now that are going away from the US dollar, basically the petrodollar system that was put in place a while back. It does seem like it's under heavy pressure right now. What do you think of time frame? And if you can just expand a little bit more on the petrodollar and the BRICS nations.
Well, I think the big story in this is that the Ukraine war, and us, meaning America, supporting Ukraine openly and defiantly, has given a lot of reservation to other countries that might have been on the fence, either ally or whatever, that if we could do it to Russia, why can't we do it to them? I think also it helped drive, China and Russia were not exactly friends before all of this. Neither is India and China. I mean, there's fear of always a war breaking out between them. Yet they're willing to come together economically and be more upfront and open about it now, which clearly says that the United States actions are causing them to do that. So I think that's the story really there. And it comes at a time when it's kind of unique because it came at a time where globalization is basically blown up. COVID was the demise of globalization. And we were more at fault of taking globalization. We got rid of all little to mid-sized companies and distributors. We went to these just-on-time inventories. We basically sent most of our manufacturing and stuff we need made overseas. And for a while, corporate America cleaned up in it because it cost a lot less. Their profit margins were bigger. And then COVID came around and we realized, hey, we don't really make a lot of our own stuff. And we're not even getting into the part of where critical metals, regular metals, medicines, all these things that we take for granted are in places and being made by countries that aren't exactly our friends. And I still think this geopolitical picture is going to become more involved in the markets as the weeks and months go forward, irregardless of what happens here politically or in the presidential race. And I have to tell you something, China is a formidable foe. And anybody that thinks they're not, I think is going to be sadly mistaken. Doesn't mean they're just going to easily become number one or take over Taiwan without a fight and all. Personally, I don't think they're ever going to invade it. I'm going to tell you right now, I think they're going to surround it and try to lead it to death. And they've seen that the United States is already having trouble on one front. Be on two fronts, it would be too much for the United States. So, but that's not likely to happen tomorrow, but it's going to be in the foreseeable future.
Got it. I was thinking along these lines, very similar to you when it comes to all these Brics nations and the petrodollar, basically the world reserve currency being under severe pressure. Do you believe that it can just, like you said, slowly continue to bleed away the purchasing power for people, for Americans living, they are physically in United States? We see what the prices are, right? We are not holding, let's say, certain amount of US dollars. We are living in Argentina or Europe for that matter, and we are spending US dollars. We are here in United States and we see what the prices are. So for a regular person going out in the streets like myself, I see what it is. I'm in the food industry. I talk to a lot of food managers, big corporations, medium, smaller ones, truckers, farmers, everybody that's doing jobs that people depend on. And everybody is complaining about how everything is expensive. There is a wait line for parts, for instance. I have a really good friend. I don't know if you read this on Twitter when I tweeted about it. Just about 3 weeks ago, we spoke, and he owns a trucking company. Okay, it's a big trucking company in Midwest, in Indiana area. He's got I think about 150 to 200 trucks, his one company. And he also has a company in Europe as well. So we're talking big money, right? And he was saying that the loads, basically for all these truckers that used to make, let's say 7,000 or 8,000 a week, one of the best drivers that he had, are now making about 2,500 to 3,000 a week, which is obviously still a lot of money. But you know, most people get over leveraged when they make more money. They buy big homes, they have 5 cars instead of 2 with the smaller families and stuff like that. So I know they're taking a huge hit. And he said his company overall is taking a 70% hit with all this that's been going on. So when you tie it all together, what's happening, like maybe the world reserve currency is going to look like it's staying around, but we're just going to slowly erode away, thinking we are the biggest fighter in the ring in a way, but we are slowly getting chipped away by the smaller fighters as they're getting more and more around us and just taking our legs underneath us. And all of a sudden the world reserves currency continues on, but at the same time the dollar just continues to implode. What are your thoughts on that?
Well, we know for a fact that central banks are holding less and less US dollars over the last decade to 2 decades. That's clearly happening. We also know by all sorts of reports that came out in the last several days that so many Americans now are underwater. Literally 70% don't have $1,000 saved for emergencies, that they're actually going to borrowing to pay for day-to-day necessities. And they're borrowing it in these brackets where they're huge interest rate charges. And they get behind the eight ball. It gets to the point where it's like borrowing money from the mafia. You can never pay it back because they just keep adding on. And
New Jersey Mafia.
Well, there's other states, but we had a famous show that was shot here about supposedly mafia.
Yeah.
The bottom, when you're charging some of these places, by the way, you could be as high as 36% interest rate. That's mafia. I mean, that's borrowing from loan shark rates.
Yes.
The bottom line is this: we are seeing a deterioration. Take out the top echelon, who still do well, top 10% or whatever. And most people are going sideways to backwards. At best, they're treading water. We continue to see several years of wage increase not keeping marks with inflation. So people, like you talked about, the purchasing power, not only are things costing more, but they have less dollars to buy what costs more. I mean, it's really a sad scenario. If people would go out, and it doesn't matter where you are in the country, this is all over the country. Go down and talk to anybody that runs a food bank. You'll find out that they've doubled or tripled or quadrupled the number of people who are coming, and working class people, higher levels than ever before coming to meet it. Car dealers are talking about how everything's blowing up. I mean, you can't keep having 7-year car loans and not expect car sales to go down, because people end up what's called upside down. As soon as they drive out, they owe more on the car than it's worth. And when those people fall back enough and they can't make payments, they'll say, here, take the car back. I'll start over again. I mean, there's a lot of things. There were homes that people are having difficulty with. The other thing that isn't talked about a lot in the financial industry, even on, regular so-called financial network, is the lawlessness now. The outright, just people walking into stores openly without any fear of taking something. If my father even saw me take a piece of bubble gum from a candy store that I didn't pay for, he would have killed me. And that's the reason I didn't do it. There's such a lawlessness now of people that who knows? And in big cities they've not seen since the pandemic. No one's talking a lot about this either. But we're seeing all sorts of studies where cell phone usage is down, empty office spaces. These cities, remember what happens? Their tax revenues come down. They have to cut services. More people leave, and it becomes a spiraling. It's happening in San Francisco, Chicago, New York, you name it, all across the places. You can't keep continuing like that. And they don't have the printing press that the United States has. So I just don't see how the economy here in the U.S. can sustain any real meaningful growth. And we're going to go down to the wire again in this debt crisis. And, you hope that they make a last minute thing, because a default, just forget it. If it defaults, then all the people that the gloom and doomers and the preppers, they could see their day. But we're playing with a dangerous can that could get into the point where you can't kick it anymore, Marco. There's going to be a day they're going to try to kick it and it won't move. Yeah, and that'll be a very sad day.
Yeah, and that really ties in for another question I had kind of like saved in my mind. I didn't want to forget it. I believe we are going to witness, and I think we are right in the eye of the storm right now, the greatest financial event in the history of the world. And just based on talking to my friend, the trucking guy that owns a trucking company, and talking about 70% hit in 2023, I forgot to mention, at the beginning of 2023 is when he started to see major declines. And I think all this ties up with the Philadelphia PMI manufacturing coming in with ridiculous low numbers. Everything is contracting. Everyone can tell. It's hard to ignore this any longer. So do you believe, as America runs, I know they say America runs on Dunkin', when you go around and you see people that are eating all these foods, whatever they're doing, they look like they're not healthy, unfortunately. But we know the America and most countries run on trucks. And when I hear stories like this from someone that has 200 semi trucks in United States and another 100 or 200 trucks in Europe running major company. We're talking millions and millions of dollars a year revenue. When this guy's getting worried, and then we hear the PMI coming out, the manufacturing out of the Philadelphia. When we hear when we see everything, do you believe that this is the greatest financial event in the history of the world right now? Is it bigger than the Greatest Depression?
Well, I'll just say this: in 2020, I believe, or might have been in late 2019, I said America was entering its worst ever economic, social, and political era, bar none, even worse than the Civil War and the Great Depression. One of the things that I think has accelerated it now, Marco, is what's happened. The SVB Bank, we saw Republican today after the close come out with some horrible statistics, really had to borrow a lot more than people imagined. The backbone of America is the small, maybe mid-sized business owner. Could be a farmer, could be a manufacturer, could be a service restaurant owner, whatever it is. They're the backbone. That's what really kept America going. They didn't borrow from the big four banks. They borrowed from regional banks. That's how local savings and loans, things of that nature. Those folks are in very tough circumstances, those banks. They have no choice but to really tighten up. And what I've heard, interesting, because we have a lot of clients in the small business clientele, they have found their credit lines being called in, inability in the last month or so to get loans that typically they were able to get credit lines without any issues. And all those things are just starting to stack up now. We're having a near perfect storm. Does it end up being the worst financial crisis in the world? That's still up for, we hope not. But this is what I get when I talk to clients who then go down the street kind of saying to the guy that's telling them, don't worry, be happy. Because they say to me this, they probably say it to you too now, because I think we both share a lot of the same opinions. Man, I'm praying you're wrong. I'm hoping you're wrong, but I'm praying I think I know you're right, and I better do something about it. People don't want to hear bad news. That's just the way it is. And we have a lot of things that have come together now, socially, politically, and economically, to form a near perfect storm of trouble ahead. And that's why I think it's a very big mistake for people to continue on depending on returns that they were able to manage these last 10 or 20, 30 years. Now, I'm not saying the market's going down 50%, but I think it's going to be a terrible mistake for people who have set up a lifestyle where they need to make 10% or more each year just to sustain their lifestyle that they've grown accustomed to. And I don't see that happening. And that's where the trouble will really kick in. And the way that they'll finally realize, Mark, is it's 1 year you can get away with it. Right now, typical financial advisor from what I call the don't worry, be happy crowd, Mr. and Mrs. Jones, it always comes back. Don't worry. Yeah. Don't worry. And for a year or so, you can get away with that. But if they got to watch 2 years of that, then I think by the end of this year, if we don't have a market that continues higher or worse yet goes lower, we could really see that feed into itself into 2024 at a time when I think we'll be in recession and we're going to have a big political battle. I'll leave you with this. Never have I seen two sides politically that I know of in the modern era that are so separate that they can't even go in the same room together. And that's Democrats and Republicans. Even within their own party, there's fractions. But when you're at this point where there's such hatred and such animosity, how, if we do have this crisis that you and I both believe is coming, how do they go in a room and deal with that? They can't. And they just point fingers and say it's their fault. And like I said, I hope both you and I are wrong, but I'm betting I certainly positioned myself not to be in that circumstances. Now, I'm not telling everybody to run out and buy a cabin in the woods and gun and ammo and dry food, but I will tell you this: you should be looking to lessen what I call less is more, to lessen your lifestyle. And if you're in debt, try to get out of it. And if you can't get out of it, try to lower it. And for some people, it's too late. They're caught in that spiral where it just keeps adding up to the point where they have to throw up their hands and look at bankruptcy or something like that.
Yeah, like keeping up with the Joneses. I made a video on that, actually titled it that way. I said that about 2 years ago when I started the channel for fun a little bit, not for fun because things are funny, but I didn't know what was gonna, I really, I didn't know that I was going to be talking to you about financials when I started talking just from the beach when I used to live in Florida, or just holding my phone like this. And it's interesting how things turn around, and people start gravitating towards those people that have the same thinking. But I also like to always look at the coin like yourself from both sides, and then trying to be like, I would interview, for example, Brent Johnson, and his view is he's a longer term. The US dollar is going to be stronger for a long time. We're going to have another big run up with the dollar and all that. I love to learn from and hear from everyone. At the end, it really comes down to making your own decision. And for me, it's been 70 to 80% working on physical precious metals portfolio, and just smaller amount into the equities, because I truly believe it. If you don't hold it, you don't own it. And a lot of people that follow me from beginning, they were saying that this is kind of extreme. Why would you do that? If gold goes crazy, you want to be more in, equities, meaning stocks, being ETFs, including certain miners and all that stuff. When it comes to precious metals, I always said that's more of a speculation, meaning gamble, and you got to protect yourself with the real things. And a lot of people have been thanking me for that, because they believe it's going to actually get a lot worse than we think. And I'm also saying what you said. I hope I'm wrong, but I don't think I am, because things are getting really worse and worse. And going back to what you mentioned about the smaller banks, the regional banks, and the smaller businesses, I read a stat somewhere just about a week ago that $4 trillion that were lended for all the small businesses, 3 trillion with a T, is from the smaller banks to all these commercial smaller businesses that you talked about that are now under major pressure as they're closing down left and right. So I do believe, unfortunately, that we're going to see the greatest, in a bad way, greatest financial crisis ever. And I think people need to prepare as much as they can with real things in their possession. And guess what? If things don't go this bad, which I hope they don't, so what? You got some cattle up front in your yard. You got some real gold, platinum, palladium, rhodium, silver, not in that order. I'm just naming. So you can all that's money in so many ways, even though some of them are industrial metals. So what are your thoughts on that to close off?
Well, you always want to own gold and hope it doesn't go up. And everybody always says the same thing to me. We just sat with some people today. They said, why would you want me to own something that I'm not going to make money on? I said, well, let's look at your portfolio. It's about 85% financial assets. You got some cash and you have no gold. Now, if you had 10% in gold, and I told you it didn't go up, in fact, it went down, you know what I could probably also tell you at the same time? Your 85% stuff went up. You own gold bare minimally as you own car insurance or home insurance, just in case something happens. Now, I believe you own it for capital appreciation as well. You made a very good point, and maybe this is something I can share here, as you said, as we close. Mining shares are not owning gold. People need to understand that. Listen, I've been around that for almost 40 years. Physical bullion is the only way to own gold. If you want leverage, that if gold goes up, certain things could make more money than the percentage of that increase, that's what a mining share is supposed to offer. Because just look at it this way. Gold's $2,000 an ounce. ABC Mining produces all in at $1,500 an ounce. So they make $500 for every ounce they produce. Gold goes up 100. From 2,000, that's 5%. But now he goes from $500 to $600 profit. How much is that? What's that? 20%. So that's the leverage that you're supposed to get by owning mining shares if you think gold's going higher. But not every mining share goes up, even if gold goes up. Trust me, I know that. I've sold a lot for losses over the years. So when people say, I want to own gold, own the physical bullion first. Then when you, like you said, speculating, gambling is the same thing. I've said that for years. When you can take a risk of loss of principal, then you can look at it. And I have to tell you this, compared to where the metal prices are today versus mining shares, and when you go down the food chain all the way down to junior resources, this is the most difference or separation of the performance of the metals versus the shares. They have greatly underperformed, given what the metal prices are getting and what you can make profits from it. And I think some of that may be long lasting. We don't have the same type of players in the mining share and the junior resource market, Marco, that existed 20 or 30 years. This is very important. 10 or 20 years ago, there were thousands of brokers in Canada and the US who built a book of business buying and selling shares, charging commissions to clients based on junior resource stocks or mining stocks. Those people are gone. No one really uses a retail broker anymore to buy stocks and pay $300 commission when they can pay the same thing, nothing, or $5 somewhere. So now that broker, he or she used to have 100, 200, maybe 300 or 400 clients who, if they liked the mining stock, they told them all to buy them, and a lot of them did. Now you can't get that distribution. So now that same mining company or junior has to try to get to those 300 or 400 people individually on a case-by-case basis. It's become far harder from a marketing standpoint for a mining business. Then cryptocurrencies, cannabis, and others took people away. You talk to a 25-year-old kid these days, you talk about gold, he says, hey, old timer, hit the road, that's a relic. I've heard that a lot, especially when, I was out there saying, sell Bitcoin with 60. Oh my, they said a lot worse things. I told you.
Yeah, I've heard about that. I watched your video.
Yeah. So it's much tougher now to be in that business. All things being equal with gold at 2000. So it's, if you want to own or get gold for what it really is, it's a hedge against troubles, finances, politicians, so forth and so on. And you made a very good point. You got to hold it to own it. Having a GLD is not the same as having a gold coin in your hand. Now, of course, why a lot of people don't want to do it is because there's such a premium. You can buy GLD equal to basically almost 2,000 an ounce, but go try to buy some silver coins now. Some of them are 50, 80% premium over the spot price, and they can't keep them in stock. So think of how much you would need to move up just to get back. I mean, that was one of the things why you didn't buy rare coins 20 years ago, because it was like a 50, 100% markup in it. There's a real economy difference between what's happening in the physical markets and the paper market. And I believe when we finally get through these paper resistance and the JPM derivatives get caught, bullion banks get caught, and we print the 2100 and something, the short covering combined with new momentum money coming in is what's going to drive gold and silver up 50% in a few months. And that will then move the mining stocks, and people will start, looking at them again. But until such time, I think it's tough sledding for the mining share, especially the junior resource market.
Well, thank you so much for that. I think a lot of people would really appreciate this video. It had a lot of good points on it. I would like to have you back on in the next couple of months, Peter. So we'll keep in touch. Thank you. Where can people find you real quick?
Well, Twitter is where I spend a lot of what's left of my time anyway, at Peter Granich. There is a website, petergranich.com, and also separate from mining and all, I'm still part of a planning group that does what we call traditional, not financial planning, but an alternative. We specialize in cash flow. We believe you're a business owner, so you would know that. If you don't have to get cash flow, you ain't going to be a good, successful business. Financial world tells you to chase net worth, but if you get your cash flow correct, you can do well without taking risk.
Thank you so much, Peter. What a pleasure this was. Thank you. We will talk soon.
Oh, by the way, don't turn off the recorder yet. I ordered meat from you. It was fantastic. You need to plug yourself. people who are watching you, because I know you sell it online because I ordered it, it was superb.
Well, thank you
I
so
never got a
much.
chance to tell you.
Well, I really appreciate that. I'm glad you mentioned it. I have very high pride in the meat that we have here, so I really appreciate that. Thank you, Peter.
Well,
Thank
I
you.
think all your listeners, the way they should thank you is to go on your line and order some from you because it was really, really good. Now, I'm not saying that for you to send a free package. I'm just telling you the truth. All right.
For you, anytime, Peter. Thank you so much again. Appreciate it.
You're welcome.
Yeah, thank you.